All right. Good morning. It is Monday, August 28th, 2023. We hope you had a nice weekend. Another warm one here in Charleston. Last week, first week of school here in Charleston County. So the first week of second grade for my daughter was a success. She's really excited. She came home and said she has a really strict teacher. All right, which she likes, believe it or not. I guess her complaint with first grade, her only complaint was, sometimes the teacher couldn't keep, some of the more rowdy kids in line, and my daughter being, I don't want to call her a nerd, but she likes to learn just like her dad. She's quite excited that her second grade teacher is really going to crack the whip here, not in a literal sense, of course, but so I thought that was cute. Soccer starts this week as well, right? So dad's the coach. We'll see if we can get the best out of our 7 and 8 year old girls here. So that'll be fun. All right, I just wanted to spend a little bit of time here this Monday morning discussing sample periods, okay, as they pertain to like investment options and so forth, and to be aware or beware of sample periods, I should say. Okay, I have some real data here. Okay, there's no feelings, no narrative. Okay, so Dimensional put this together since 1927. All right, so nearly 100 years since 1927, S&P 500 has averaged a 10.1% return on average, and then the U.S. Small Cap Value Index has performed 13.1% per year. All right, so 3 points of outperformance on average per year over the last, call it 100 years. Okay, so there's a number of reasons for that are outside of the scope of this morning's video, but about 3 percentage points of outperformance. All right, so I think you can conclude from that, at the very least, a rational investor would probably want some exposure to small cap value in their portfolio. All right, so it kind of got me thinking down this rabbit hole. Why don't you hear, on the so-called stock market channels, CNBC or Fox Business or Bloomberg, whatever you might watch, you don't hear a great deal of, hey, make sure you own, some small cap value in your investment portfolios, right? All right, and I think the reason for that is pretty obvious. Okay, small cap value stocks, they're going to be relatively boring. It's going to be a lot of names that you haven't even heard of, and really what I think it gets down to is the best way to own those names. Okay, so the best way to invest in those names is going to be through very low cost, diversified ETFs, right? That's exactly what we use for the people we serve, like in this asset class. All right, low cost ETFs. All right, and of course, like that doesn't sell in terms of like the CNBC, the advertisers, the financial media, right? Like you always remember, and I know I say this from time to time, many times, what's best for you, even outside of finance, just life in general, like what's best for you many times doesn't sell. Okay, so never forget the conflicts of interest present within the financial media. All right, like CNBC, they want to say, buy Apple, short Google, use a long call butterfly option strategy, right? All these concepts, because that's what sells, right? That's what keeps you watching TV, that keeps you subscribing to their newsletters, that gets you buying books, right? Like that's what sells. And investing in a low cost, a low fee ETF to get small cap value exposure, like that doesn't sell. And then just to keep building on this, like many of these short term strategies, whether it's some option spread or short this, go long this. Many times these strategies are built around like 1 month sample periods of data. Sometimes like 1 day, right? Some of these day trading, I call it fraud. Just these gimmicks that would never work. Where I could make the case, this is 100 years of data. I could make the case you need to be careful even with like 10-year data sets. All right, so so this same data set that I pulled, which kind of got me thinking of today's topic. All right, so remember, over the last 100 years, small cap value has outperformed the S&P 500 by about 3%. All right, with that being said, like in the most recent decade, called 12 years or so, the S&P has actually outperformed small cap value by about 1.7%. Okay, 1.7% over the last 12 or so years. But it's really, really easy to forget, and this is why we have data. The decade before that, right? So the so-called lost decade. So from 2000 until 2009, an investor in the S&P 500 actually lost money over that 10-year period. All right, while the same, exact same time period, 2000 and 2009, U.S. small cap value returned 12.3% per year. Okay, per year. More, twofold, double your money in that same decade that the S&P 500 lost money. All right, so just wanted to bring that up. Be really, really careful with sample periods, especially when you're being sold a particular investment. Anything you're even considering, right? Like you want to have more data than, hey, this is what this did over the last month, the last year. Even so, I mean, I would argue you should really look at data much, much longer than even 10 years, right? So be careful with sample periods as it pertains to investment allocations and the strategies that you want to use. Just quickly, last week, equity markets relatively flat. Into fixed income was more interesting. You saw the short end of the yield curve continue to increase. All right, so yields higher on the short end of the yield curve, and that was all just the narrative coming out of Jackson Hole at the annual Fed meeting there, where just the tone was a little bit more hawkish, I would say, than maybe the market was anticipating, but really not a big surprise there. So questions, comments, concerns, please let us know. We love hearing from you. If you have not yet scheduled, so fall reviews are start 2 weeks from today, which we're really, really excited about that. So if you have not yet scheduled, please do as soon as you can, if you plan on meeting with us this fall. So we hope you have a nice week, and we'll talk to you soon. Thanks.